I'm going to cover everything you need to know about turtle soups. There's two different types of turtle soups that you want to pay attention to. You have reversal turtle soups. These are change in the state of delivery soups that change the direction of price. So it changes trends pretty much. And then you have entry turtle soups, which is an entry, a part of an existing buy or sell program. So there's two different variations. I'm going to show you guys the difference between each. Now, real quick, if you don't know what a turtle soup is, in a bullish scenario, it's when price goes beneath an old low. You're buying external range liquidity. So you have a limit order beneath this old low, anticipating price to go beneath that old low, wick this area, and then pop right back up and continue in the trend it's already going, or just completely reverse directions. But it's when you're buying external range liquidity. This is external range because it's outside of this low right here and this high up here. That's what makes it external range liquidity. A turtle soup in a buy scenario is when price goes beneath that old low. You're buying that external range sell side liquidity and anticipating price to expand to the other side of the range. In a bearish scenario, that would be price popping back above an old high. So price sets a high, okay, and then pulls back above it. This is when you're buying external range buy side liquidity and then anticipating price to head the other direction. It makes it external range by going outside of this range. So if this is the current range, when price moves outside of that, this is external range. It's not inside this price range anymore, and it's buy side liquidity. So in a sell scenario, you're selling above an old high, anticipating price to reverse and go the other direction. How far can price move past this old high, or how far can price move past this old low? There's three tools that we could use. We have the opening range gap, the new day opening gap, and the new week opening gap. ICT says we can go further, but this is a good baseline. Use 5 weeks of new week opening gaps and 5 days of new day opening gaps. If price is hovering right above a new day or new week opening gap, price can go past this old low, tap into that old new week opening gap or new day opening gap or opening range gap, and then that could be the key level past that old low for price to reverse at. Similarly, in this example, price can go past an old high into one of these three levels. Now, if it's like 100 points beyond there, it's not going to go there. But if it's hovering right beyond that level, this is a key level that I will use. I'll wait for price to return to that area, and then that could be the catalyst to send price the other direction. So now what's the difference between a reversal turtle soup and an entry turtle soup? A reversal soup changes the entire direction of the trend. So let's say that this is a 4-hour chart. Price expands higher. This is bullish order flow. Starts to drop back down lower. This is lower time frame bearish order flow. Okay, inside of this trend down. A reversal soup is when price goes below an old low and then it changes the state of delivery. It's a change in direction that could last a session, could last a day, could last a week, but it changes the entire direction of order flow. That's what a reversal soup is. An entry turtle soup would be inside of this price leg after it created that change in direction, the change in trend, and it's already expanding higher. When price trades down into a fair value gap, this is from ICT's words, this isn't my words. Anytime price returns to a fair value gap, that's also a turtle soup, because what's happening here is that this fair value gap, the fair value gap high, which is this candle's low that I'm pointing towards, when price drops beneath there, it's going beneath a low on the lower time frame. This is an entry turtle soup. It's an entry mechanism within an existing buy program. Why is it an existing buy program? Because it already created the reversal soup and it's already in bullish structure, right? Bullish order flow, down closed candles are being respected to the upside. So when price trades down into this fair value gap, it's going beneath a lower time frame low. And also, an institutional order flow entry drill is when price just takes out that FVG high. So it would do something like this, hovers above it, drops down, takes out the FVG high and reverses, and goes right back up for the short-term high. An institutional order flow entry drill, which is just that quick move, barely into a fair value gap and reverses. This is an entry soup because it's a fair value gap inside of an existing trend. It's taking out stops for the purpose of smart money taking over those positions and then repricing it in the other direction. So an entry mechanism turtle soup is, see how price is expanding up higher towards this high, and this is already an existing trend. Okay, if we go down to a lower time frame, if we go back to a 4-hour chart, see how price drops down lower, trades into this bullish fair value gap. Okay, it just taps right into it and then it reverses the other direction and heads towards all-time highs. This is an entry mechanism turtle soup because it's a turtle soup into a fair value gap in an already existing buy program. Price was already going higher regardless. This is just an entry to get a part of that existing trend. If you go down to a 15-minute chart, see how there's lower time frame lows into that fair value gap, and then you also have the fair value gap high. There's a low right there as well. This is an entry mechanism soup. So these are both reversal change in the stated delivery turtle soups, because this changed the stated delivery bearish, it changed the trend, started to trade lower. This changed the stated delivery bullish, and then it started to trade higher. An entry mechanism turtle soup would be price trading above an old high in this already existing trend lower, or price trading beneath an old low in this already existing trend higher. Okay, so if we go back up here, there's a fair value gap in a premium. Okay, this is a bearish fair value gap. This would be an entry mechanism turtle soup. It still is a turtle soup because this is a high on a lower time frame. Price popped above it, and then you could see that sponsors the move all the way down to this previous day low down here. Now here's another example of an entry mechanism turtle soup. This isn't into a fair value gap, but it does run beneath the short-term low, takes it out, and then expands higher within an already existing bullish trend, because this was the reversal change in the stated delivery turtle soup. This is just the soup along the way to where price was targeting, which is this previous high up here. If I could only do one type of turtle soup, here's what I'd do. I'd look for the daily bias, find the likely expansion higher or lower, trade within set kill zones, whether I'm trading between 2 to 5 a.m., between 8:30 to 11 a.m., between 1:30 to 4 p.m. I'd look for a stop hunt opposing that daily bias, and I'd buy beneath that liquidity and then target the opposing liquidity. This is a perfect example right here. The daily bias was bullish. Price runs a short-term low. Anytime you have a daily bias that's bullish and price is expanding for a target, let's say that this is the target up here and price is already in bullish order flow, so it's already consistently trading higher, down close candles are getting respected. Anytime price runs beneath a short-term low in this already existing trend, I anticipate it to be a turtle soup and then expand towards that target. Here's an example of an entry mechanism turtle soup. So price traded above this short-term high into the order block, but see this fair value gap right here? If you extend that out, this was a part of an already existing trend where I'm selling into the fair value gap, anticipating for it to continue in that trend. This also was posted to Discord members. I told them that this is going to be the level to send price down into the sell side liquidity. So now we're going to dive into my ideal scenario for a turtle soup, which is finding the directional bias on the daily time frame. If I can frame where I believe the daily range is going to go, whether it be higher or lower, any stop hunt opposing that direction inside of a kill zone is a high probability soup to me, especially if it's in a day where it's likely to expand for liquidity. So you have previous day low taken out over here. I made a review in the Discord talking about how the weekly bias isn't clear, so I'm just kind of relying on daily bias and lower for now. But price took out this previous day low, okay, popped back into the range, and then we had all of these previous day highs clustered close together. So I did alert to Discord members that the bias is higher. We were bullish since yesterday. It just didn't deliver to the targets yet. If we go down to a 15-minute chart, the bias was bullish because price took out the previous day lows over here, and all of the liquidity above. This does look really ugly. I don't know why all these trend lines kind of messed up, but all of this liquidity was clustered very close together. And any stop hunt opposing the direction of that daily bias, since these levels are the draw on liquidity, because price took out the sell side, okay, you had all of this buy side resting above. The weekly bias it's kind of in a consolidation, okay, so I'm looking for price to return from buy side liquidity up here to sell side to buy side. It's kind of the framework I'm looking at in those higher time frame consolidations. So since I have a directional bias that's bullish and price does a stop hunt beneath clear lows, beneath that 8:30 a.m. opening price, this is a high probability turtle soup, and then price can expand the other direction. This is low resistance because it's a part of the daily range. A lot of you guys are looking for turtle soups just looking at a 5-minute chart, like seeing, okay, we have this right here. Price should take it out and reverse the other way, but it's already completed this huge expansion and part of the daily range. This is the turtle soup that I'm interested in at a time between 8:30 to 11 a.m. when we're likely to see volatility. You need volatility. If you don't have volatility, it's going to take out an old high and it's just going to consolidate. So it needs to be at a time where we're likely to see price movements. Now, if we zoom back over here, this is another high probability turtle soup. Why? Number one, it's in London kill zone. Okay, it's a clear swing low, and the daily bias is higher for these levels. So I'm going to look for stop hunts opposing that direction. If I know what the daily bias is, I can frame a turtle soup setup that's high probability, because any stop hunt opposing that direction of the likely daily expansion, it's just going to be a stop hunt. Then this is going to become a protected low and not get traded back to until price reaches these levels. I do post the daily bias pretty much every day in the Discord. You could see my public track record in the free Discord if you want to see how right or wrong I am. Right now, I'm a little bit below 80%, I believe. So if you guys are interested in that, you could check out the free Discord and you could look at the DDT floor live log, it's called. This is a reversal soup because it changes the state of delivery. Consolidation. Okay, this is all distortion. This is ugly price action. I don't want to be a part of it. Time, 2 a.m. Okay, price starts to drop lower, takes out the sell side liquidity. The daily bias is higher. I told Discord members this 15-minute right here, we had this mitigation block, and this is my DDTR range. That's one of the models I teach in there. This was likely to be the catalyst to send price up to these price levels up here. Since that's the bias and that's where price is likely to go, price can do a stop hunt and then target the opposing liquidity, which is all of this trend line liquidity. And then previous day highs have more liquidity beyond them, so I want to aim for those. This is Tuesday, previous day high, also London session high, and then this was the current high of the week. What is an entry mechanism turtle soup in this, Dan? See how price forms this fair value gap on the 15-minute time frame? This was the change in trend. This was the change in the state of delivery because it was trending down, changed the state of delivery. This is an entry mechanism soup because what it did here was it traded into a fair value gap, a part of now a new trend that's already an existing buy program. Price can trade down into there. This is a turtle soup. It's going beneath this 15-minute low. That's a turtle soup. This now becomes a protected low, and price can start to trade higher. So hopefully that makes sense, the difference between reversal soups and entry mechanism turtle soups. My ideal scenario is I'm looking to capture something, a part of the daily range. So I want to get the likely daily bias, and I'm looking for a stop hunt opposing that direction, whether it be an entry mechanism soup or maybe this is a reversal soup like we have down in here. But either way, I need to be trading at a time where we're likely to see volatility. You could look at the economic calendar for that. Also kill zones. These are highly active times of day, whether you're looking at London, whether you're looking at New York AM or PM. Those are the times that I like to trade. That is going to be it for this video, though. If you guys would like to see a part 2 to this where we go a little bit more in depth, or also I could do a live example of trading the turtle soup, let me know down below and I'll do that.